Good morning. All right. So markets obviously, are going down. Bonds are going up. And as we do every day, we see what the movements are and where they are in relation to yesterday to start. And then, the existing trend and support resistance and so on. So bonds accelerating to the upside here, and there is nothing to stop them to the left, meaning you just since they've broken out here, similar to what we looked at gold a week or so ago when it broke out. There's nothing to stop it from going higher. And so it's a similar situation here. Gold had years of consolidation prior to the breakout. Now bonds are breaking out here, suggestive that they can, they could stop here, they could stop here, they could keep going above 180. We don't know. Extended on the daily, true, Howard. However, they had a resting period here, this consolidation over several weeks. So just because anything's extended, you should never think that it has to pull back. I know that's the common sense logic, and nothing wrong with that. As far as saying I'm not going to enter here on this time frame unless it was to pull back, but it doesn't have to pull back, especially after multiple weeks of resting, especially during an emotional, news-driven type of situation like this. Things can, get a bit crazy. I mean, you couldn't enter on an intraday time frame, like an hourly at support, and you see this kind of consolidation here and a green bar up. Understanding how to utilize multiple time frames is key to getting on board, let's just say, the moving train. So as I said, this has plenty of room to go higher. And, with that being the case, this chart is live right now. And this is the yield curve of the 3-month versus the 30-year, which was the only comparison of longer versus shorter that wasn't inverted. And you can see how close it is to an inversion. And based on this chart, it doesn't look like, there's anything that's going to happen here to stop this from happening. Now, that doesn't mean as far as, an effect on the market immediately, because it typically doesn't happen that way. But the longer term effect, which you will see, is not a good one. Right. So it can get, further down below just inversion, and especially if bonds were to continue to push up, as they did here in 2000 and over here. And the markets didn't collapse immediately, but you can see that they had very meaningful declines. So we look at the past and we say, oh, this is what, is a suggestion for the future, and this needs to be respected. And we do see how transports have been lagging, and that's another heads up to what's going on here. We had the wrong way option traders loading the boat on calls right at the top. Breadth was diverging, meaning there weren't the same amount of stocks that should have been participating. So this is a bit of an ominous situation that's developing here. So we shall see. The 2 and the 10 pretty much will just kind of move along exactly with this. That's why I really don't look at it. So I if you're saying it, I take your word for it, but it has to be damn close, if not almost touching it already, because historically they are going to move in lockstep with each other. So we'll see what happens here. This looks like it's going to happen, and then we'll just see what happens as far as trends. And we've already violated the trend on the daily time frame, and we'll see how that evolves into the weekly time frame. So as you can see, transports were already lagging. They've broken down here. So this is just a mess, but it is in alignment with the thought of, the yield curve inversion, and transports which are influenced greatly by the economy or the expectation for what's going to happen in the economy. So this is in alignment with a bearish view there. We'll be interested to see, does it get down here? Does it break? We always have to continually adjust based on new information. Meaning everything right now looks rather bearish, but some, especially in this market, some news event comes out and all of a sudden the transports are gapping up huge and, yields reverse back down. So that's why money management is so important, that you don't put yourself in a situation where that type of event could wipe you out. And it does happen. Russell all the way back down to this support level. They found some buyers here. It's rolling back over here this morning. And just looking at 247.5, 47.5, it's within this range here. So it's not like it's gapping down here. It's got some reference points, which you can see here of support. But at this point, it's right here at this prior low. We'll see if it holds. Whether it just continues to roll and whether the markets give back that gain yesterday. So yesterday morning, while things were up and then eventually markets came in a little bit and then rallied, you've got this one green bar, that on this, looking at the S&Ps, doesn't have the 24-hour, an inside day, a stabilization day against a crushing move to the downside in this time frame. So while it was just stabilization, and had it gotten above this high today, we could have had the potential to move into this void, this unfilled gap, but clearly that's not happening. And now that it's 284, it's gapping down below yesterday's low, which certainly opens up the door to a move down here. We'll see what happens here at the open. Some jiggles, or whether it can try and hold, or whether it's just gonna collapse here. Looking at the Qs, it was the same thing, a little bit stronger. It did get above the high, so it came back during the day. Just move this to make it clearer. So now it's moving down. It's on a little support here. We'll see that a bit clearer on the futures. And S&Ps, you can see how they are moving deeply into that big green reversal bar. And, I put this reference point here a little while ago, as these were just kind of rolling up, and the 2888 was there from yesterday. So as prices came up into that area, sellers began to step up, and it made that little peekaboo new high. And this just looks like it's going to just keep going down. So as mentioned in the past, these momentum big wide bars create voids inside of them. And if the support isn't created, which is what it needed to do here, it was beginning to do, when it fails, it just opens up the door to just negating the whole bar. So we'll see. This looks like it's going to keep going down. I suppose this little shelf right here could provide a stall point. Below that, the expectation would be it's going down to yesterday's low. And Qs, same story. This on the chart now is meaningless. See, it's broken here, right? It was above here, I guess 10, 15 minutes ago. Now it's beginning to break down. Same story. It's got this little shelf reference point right there. Maybe 7,400 comes into play for a little bit. So be nimble here, as an intraday trader, as a swing trader, a long-term trader. There's just really not much for you to do here unless you find individual stocks that obviously different patterns. This is just a little extended to the downside, and we need another day or two to really determine whether it's going to hang here for a while to try and bounce up, or the next leg down here. The Dow, same story, right? So these markets are looking very similar now as they move up to their respective reference points, similar trends intraday, the big moves down, and so on. And now this is, got that little shelf the same way, but it looks like the prices can just go back down to to yesterday's low. And there's the Russell, same picture here. This had already come all the way back down to the beginning of June low, that rally. Prices came up, so it's given that all back. And we did look at the weekly here. Just pulled all the way down in here, and well, we got 3 days of trading to go. We'll see what happens if this holds this or not. But again, here's the void concept. Looking at the Russell, this comes down here, hangs around. It doesn't. If it doesn't bounce, it has a void for this to have a very significant move to the downside. You can recognize the distribution pattern there, and if it starts moving below this level, it's just going to be a question as to whether the next level holds. Right? So when you have things that move as rapidly as this did off of that June low, and markets, stocks, whatever it may be, don't create support, or if they do and then that fails, that just opens up the door to a complete retracement of what was strength. So one of the things I like to tell everybody is that the strongest part in the chart, the structure of the chart, is the weakest link in it, because that strength, yes, did suggest continuation, but if it doesn't, and that creates the void, if it doesn't build the support, which this was, and it looked like it was going to go higher over here. Remember we talked about the Christmas tree pattern, red, green, red, green, red, green. It was, and it actually broke out. And so now if this is failing, this is the weakest link, and that will be a good shorting opportunity. Market daily short, not yet. First, it needs to retrace. Well, shorts for now, Tony. So if we talk about shorting the S&Ps, all right, we're going to look at that from an intraday point of view, and we're not going to short something that is falling like this. So the factory work, if you will, is to go to the hourly and see where the reference point is to the left, which is here, and then we'll wait to see what the reaction is. So while this is all moving to the downside at the moment, if we were to get some type of, I don't know if there's one here, whatever, like yesterday, right? If we were to get some kind of a pattern like this in this area, well, we might actually consider going long as an intraday trade against this trend, and then wait to see how far it goes, and then look to go short. So again, we may think to do a counter trend trade, especially if this dips down further. Let's just say, for example, this runs down to 2,800, whole number, and then starts forming a W bottom or a head and shoulders bottom. As a swing trade, you're not doing anything now shorting the market. You're going to wait until probably next week or something to develop here. This is extended to the downside. It's gotten close to support. Well, let me back up on that a little bit here. If you are of the opinion that this market's going down and you want to short it, well, first of all, do you have some pattern that you trade that gives you an entry point? I don't see anything right now. This bar isn't even complete. But let's say we have something, or do we just want to use this bar, right? We look at other type of patterns that are, let's say, more complete. But if you just wanted to say, hey, that bar is a red bar, I think it's a continuation to the downside, I'm going to short it. Fine, do it. But share size it for the stop like some ridiculous place up here, so you've got funds to add to it. That's the mistake many make, is that they go all in on something that is underdeveloped, and then they get stopped out, and then maybe it goes in the direction that they originally thought. Another confirmation of this inverted yield curve, transports going down, bearish view, bear market coming, so on and so forth, is the deterioration in oil, right? Stocks that move goods and services going down. What do you need to move goods and services? Not completely, but you need fuel. Nobody wants the fuel. Yields are going down. Why are yields going down? Nobody wants the money. There's no demand for money. All of those things point to a recession. And what happens in the recession? Equities go down. We already looked at bonds. Gold pushing up here. And just to point out what we looked at for those that are new, this was the breakout a couple of weeks ago or a month ago. And there's the same concept of the void. Nothing to stop this from continuing to move higher. And silver, well, it got moving today. I just taking a look at that now. So that's it. I went a little too far, but hopefully that was a benefit to everybody. Sorry for the short time, Dan.
Oh, no worries. It's always very valuable. That's our game plan, current analysis. All right, let's go through opens real quick, and then there's a ton of gappers, obviously, a lot of earnings. In the weekly, we actually put on a spider put spread right on this afternoon breakout. So the timing was perfect. And now we're dealing with a gap down. It's far away. It's the 180, 281s way the heck down here. Nothing to do right now, but it's a bearish gap. I did say yesterday, if we take out yesterday's low, that's a big old warning sign. So I might tighten it to 30-minute low. Same with the VIX. We had a beautiful double top, timed it with the spiders, gapping up here with the market. We'll just keep our stop on that. And that's it. Swing and options trader, AEO short, SIBO covered call. I can't tell where it's gapping, but a beautiful reversal yesterday. INOV, long stock, Mighty Mo, short stock, Postage, short stock, TDG. We bought this intraday pullback right here. I saw some prints pre-market. I sent out an alert saying, just get out anywhere positive you can to reduce exposure. Tilray legged into a covered call. Urban, short stock, and ZTS was another, beautiful gapper that we bought into the close. And it's gapping down a little bit, but not much at all. Nice relative strength there. Yeah, there's a ton of gappers. Let's go through them. CVS, 57 bucks. Yeah, that's a nice gapper. I'll put that on the list. RYTM, 2370. Big old gap. We'll come back to it. Remember, I'm looking for the best of the best here. Pre-market 552. That's a nasty gap, negating those two bullish bars. INGN 4460. Wow, that's pain. Wow. Wow. Look at that 2-bar reversal, climactic sell setup. And that's all she wrote. IAC, a monster gap up 258. It's too big to be tradable. Look at this little guy, TMF. If you overlay that with the spiders, that's relative strength award. Wow. Cyber, I had it on my up list today. Now it's down, so I'm just deleting you. Weight Watchers. Remember we had this as a core long, folks? Right on this gap day, I gave it as a core long. And then when it had this gap and crap inside bar, I moved it to whatever, I think under the low of that bar, and we trail stopped out at a small gain. And now it's gapping up 25 bucks. Look at this monthly. So let's keep that on our core long watch list. MU, it's still in an uptrend, came back above the 50. If the market does get bullish, and semis are holding, then that's a long watch. Beyond was up, no interest there with yesterday's wide range bar. Yeah, Howard, we got a ton of gappers here. I'm going as fast as I can. 60 bucks. That looks like a buyout to me, the way it's right at a round number and a tight. And look at it, it's way the heck up here. I'm just deleting you. There's a CBS. AMAG 760, a nasty bearish gap under all of this. NVTA 2860, it's a big gap. I need a pullback. Octa 126 and change. There's nothing there. Newer 61, getting just decimated. Look at that M top on the monthly. You had a 2-bar reversal on the weekly. You had a breakout failure, wide range igniting. That was bearish daily, weekly, monthly right there. HSIC, that's garbage. GWPH, that's one of those marijuana stocks too. 167, gap and resistance. This was on our gap list yesterday, or 2 days ago rather, ALLK. There's nothing there. SSTI, nasty down gap. Vive 158, nothing there. There's the Weight Watchers, newer, we looked at. SEBG, 76 bucks. That's a big bullish gap, but it's too big. Golf Hotel, 109, same. But, you know, that's a bullish gap. Let's come back to it at 10 o'clock. This was a bullish gap yesterday. I think, McGraw, you asked me about it, and I said over today's high is okay. AIZ. It's a mess. Hubs, 10 bucks, 175, gapping way the heck up here. So now that's a bullish island reversal, leaving these 2 bars as an island, but there's no good trade setup. Boy, yeah, that's a mess. WTR 4050. There you go. Here's a nice bearish gap under the low of these tails. I'm going to put that in this window. AFG. I can't tell what it's doing. HST. Garbage. FANG. Down and garbage. M-chip. Was up more this morning. Yeah, we'll leave them on the list, but there's nothing right now. Here's Max, 11 bucks, 85. The gap's too big. It's too big. From PXD, can't tell what it's doing. NRG, bearish gap down, and monthly has room to fall. 32 bucks. We'll come back to that. LL. This has been in a death trend. The monthly is a breakdown. It's just, you know, it's going to be far from the declining 20 right now. IONS is a mess. You're gone. ICPT 62.75. 30-minute high, possibly put spread. We'll come back to it. CVS we already talked about. CPRI $33, gapping right here. Maybe a day trade, but not a swing. Win had earnings, and it gapped up, and now it's down 109. It's still in pain. I wouldn't touch it unless we got a reversal. Pizza. All right, we got 2 minutes. I'm getting close. Pizza 42.50. Bearish gap, but it still has this prior low. PXD we just talked about. M-chip talked about. Hertz. It was up earlier. There's no pattern on the daily. Edit is a mess. Devon, a mess. Disney getting whacked here, 135. No pattern, but that's a bearish gap. This one it's not earnings, but I just kept it on my list here. It's a buy setup, support. but it needs a potent reversal. All right, so I'm done now. I got through all those. Good. Apron had earnings yesterday. DF, yeah, these are yesterday now. C's, gap and crap. It was a bullish gap yesterday. Sage, mess. Region is a bio. It's a mess. Moss, earnings yesterday. Mess. EMR, could be a put spread 30-minute high. It did have a reversal yesterday. Mess. T2, mess. THC, mess. Shack, that was our beauty yesterday. Let's continue to watch that as a 1, 2, 3. Marriott got whacked on earnings. Claire, Zebra, Tilray, we have a covered call. PPC was on my long list and then it turned to garbage. Levi, that double bottom didn't hold. SIBO, we're in. EIX was on my long. Well, actually, I'm going to put this back on my long list. I canceled it yesterday. And now it's holding pretty well. It needs to hold this 50%. So that's back on my long list.